Everybody, welcome back to another pre-market live stream here with the Everyday Gold Advisors. Hope you're having a good morning. It is another day with us here breaking down the financial markets, SPX, NASDAQ, and the Dow Jones as we head into this week. A little bit of a pullback here as we anticipated, and I don't know if we're actually going to seek for more blood. I am of the mind that the short squeeze is not over just yet. However, we will be watching these two pivots very closely heading into this week. I did mention the first 2 days this week, you should definitely not trade. Since Monday, we've been holding strong with that thesis so far. We played it pretty close to the vest so far. This week has been so far a decent week, I would say. Just not overly ambitious yet. We've just been kind of taking trades that have been breaking out. Caught some moves on NVIDIA. I did mention about semiconductors on Monday. Hopefully you made some money from semiconductors, which I had already pointed out. And then we played some Meta, some Airbnb, some more Meta, DoorDash breakout yesterday. This wasn't a really good trade, but you know what? I'll take it. It was still profit. And then more Airbnb on the breakout yesterday. And then we took a strangle on Airbnb earnings, which should pay out this morning as the market opens. Everything and all eyes are on the Fed right now with their recent meeting and then the comments after the Fed meeting, which are now starting to be analyzed. And I have just read, majority of the reports that were posted. it does seem to me that the Fed is leaning dovish all of a sudden. Now, let me be very clear that it's not saying that it's not going to hike rates in the future. That is definitely still happening. It's how much they're going to hike rates, and we posted a full report on this from Goldman Sachs on our Discord just this morning, which was really important, which is the FOMC has changed its tone and is backing out for now. So I'm just going to show you this one page, and there's much more that goes talked about this in the other pages. But essentially, Chair Powell describes the hike as unusually large, which I pointed out on last week's pre-market live, and suggested that the Fed would be data dependent going forward, thereby dropping the forward guidance from previous meetings, having reached what they believe is neutral. So the Fed thinks that they're at a neutral rate. He explained it will likely be appropriate to slow the pace of tightening notably, and Powell emphasized the importance of the June dot plot, which had a median forecast of 3.375 for the end of 2022 and 3.375 for the end of 2022 and 3.75 for the end of 2023. This is despite the June CPI beat, which we got off after the June meeting. One could have reasonably expected an upward revision to their own rate expectations, but we didn't get that. In addition to the dovish side, he said the full effect of the rate hikes have not been felt, and that the FOMC would react to a combination of growth, labor market, and inflation data. So a significant departure from the single-minded focus on inflation in the prior Fed commentary that they've been talking about, and this would be clear that they would rather do a 50 basis point rate hike at the next meeting, and then they will kind of steer towards 3.5% by the end of the year, pretty much, right? Which is obviously not what the market is pricing in at this point. So why is the Fed more relaxed and willing to slow down? Firstly, they are around their estimate of neutral following this week's 75 basis point rate hike, and then there's a lagging effect of rate hikes, right? When rate hikes happen, it's not an immediate effect in the market. So there's usually a lag time of like maybe a month or two for rate hikes to set in, because the banks have overnight rates that they have to adjust towards, and then after that, the market adjusts, appropriately. So there's an argument here for greater caution at this point, given how quickly the economy has slowed in the previous cycle, once the policy has hit 2.5% in that time. That was in, I think, back in the 1970s. And importantly, Powell noted that the full impact of FCI tightening, which is financial conditions, was yet to be felt. So the Fed thinks that we should pause for a little bit and then continue to cycle based on being data dependent. Okay, so that's where's the Fed at? Now this considerably affects the bond market, and then the bond market affects the equity market. So you have to remember, this is a chain of events that take place. This is not a direct thing. Obviously, it is direct, but it's indirect, you would say. You could argue to say it's indirect, right? Because whatever that happens to the Fed decision affects the bond market directly. So we're talking about TLT and TLH, right? And so if they say they're going to pause rate hikes, then we're likely to see yields get kind of higher again, right? Which we're seeing the bond market already adjust to it, right? And then if yields get higher, then that erodes the valuations of stocks, right? Because yields higher means it's going to eat up into the valuation of your higher tech stocks. Because remember that not tech in general, but every stock, right? It's valued using the 10-year bond. And so if you look at the 10-year bond, you're talking about TLH, which is a 10 to 20-year spread, right? You can see that bond prices are coming down. Bond prices come down, then the yield goes up, right? And then what are stocks priced? They're priced using a discount rate, right? Discount rate, let's just call it D. And if the discount rate is higher, then that means prices of stocks go down, okay? So we do valuations based on the 10-year yield. And if the 10-year yield goes up, then the 10-year yield offsets the price of the stock because the valuation of the stock gets lower. So we are looking for that correlative reaction in equity markets, but then there's also a technical perspective on equities here where shorts continue to be squeezed to the upside, and we're not seeing a lot more shorts pile into the market. So a lot of the exposure that was scrambling to get in on Monday and the whole of last week, we're not seeing that much pressure to get in anymore, but we are seeing shorts continue to cover as the market hits higher. So there could be an effect of one or two things here. The first is we break down further when there is more information from the Fed members, or second, the indices decide to break out either way. So it's good to always know what is happening on the background in terms of macro and then correlate it to what you understand that is happening in the markets, because, and obviously I'm here to just simplify and distill everything for you so that you can understand this stuff, right? Because if you were to just read the report on your own, you'd probably be really confused and you'd be like, what the heck are they even talking about? What is a terminal rate? What is the dot plot? What is this? What is that? So you should also kind of do your due diligence and find out all this information and see how it correlates to your own understanding, right? But that's what we're here for. We're here to provide you some quality education so that you can make your own defined decisions throughout your trading session, okay? Okay, great. So let's talk about technicals real quick. We're done with the macro, and let's jump into technicals for indices, and then we'll talk about some opportunities in the market right now as well. If I see any, I'll just usually cycle through all of these opportunities, and I'll kind of go through the ones that I'm looking at. And of course, if you're in the chat here, make sure that you drop some tickers in the comments or the chat so that I can go through them for you. If you want me to chart them, you want me to give you my opinion on them from the technical perspective, I can do that for you. Yeah, so drop it right now and we'll go through it. Thank you very much. And also, if you're here, thank you very much for taking out the time being here. And also, don't forget to smash the like button while you are here. So I truly appreciate that. Okay, so really clear cut with the SPX today. Really don't need to analyze or overdo this, okay? Break below 40.60 sends us downward into 39.90. Simple as that. Break above 41.40 sends us to 4,200. Easy, simple, don't complicate, okay? Now, when I say break above and break below, we want a volume breakout. We want a momentum behind it. We want these large 15-minute candlesticks. If you realize this past 2 days have been shit, right? It's some complete shit. So this was good momentum, but then we weren't able to break this floor, which was here at 40.78. Now, we need, in order to go for the downside extension, this 40.78 floor has to be broken. And then this upside 41.40 has remained 3 times a very valid supply. So we need to keep our eyes on this pivot where we're moving between. Any move from above that and below gives us the golden ticket to play a short or a long on SPX, okay? And then you can use SPY as a proxy, okay? This is the reason I don't look at SPY, because SPY would be kind of misleading you sometimes, okay? So SPY is also lock grid in this little, what do you call this, movement here. And if you look, actually SPY broke yesterday, right? Based on SPY pricing, right? But if you look at SPX, it didn't really break, right? SPX didn't really break. SPX has been in the same range, okay? So you have to look at both, because this takes into account a lot more pricing. Remember to not always just look at SPY, because SPY is not a good, I mean, even though it's very tradable for smaller accounts, you have to realize that it might show you that, oh, it's broken out, right? It broke down. And then a lot of people got trapped right here for a upside, right? I don't know how many of you got trapped, but that happened yesterday. Okay, now be really careful. Okay, be really careful. So when we talk about such things, that's what I'm trying to make you understand. Okay, so simple on SPX, right? And then I also mentioned about NASDAQ, right? NASDAQ on Monday. NASDAQ with the bounce on the dual zone. And NASDAQ is much more bullish. It's leading the market here, right? We spoke about this on Monday, that NASDAQ is leading the market. And if we get that break and the bounce above 13,000-ish, right? 13,000-ish, like let's say 13,000 and change, 13,100, right? Then this sends NASDAQ higher, right? And the NASDAQ has been suppressed. Remember that NASDAQ was the one to first get killed when the market started its descent, right? And so if the market starts its descent and then it got killed first, it's likely to recover first, okay? So if the bull market starts from this bottoming out, then NASDAQ will be the first to move rather than the SPX, okay? Just remember that, because it was the first to fall, right? Okay, cool. And then if you look at the Dow is kind of chilling. It's kind of in between. It has a lot of room to go to actually break its range, which is going to be, you know, the 33,250-ish. Let's just say sub 33,300. And that's important to note. So from the indices perspective, tech and disruptors, which are growth, which we're seeing what is most of capital is flowing into the past 2 weeks, since last week, since the rally has been red hot, we've been seeing a lot of the growth names start to get bought up, right? Stocks like I want to say basically anything ARK, honestly, anything ARKK pretty much has been kind of seeing inflows. So we'll talk about a few of them, which are, for example, let me just pull up some of them. Not Fubo, DraftKings. DraftKings has been seeing some inflows, right? DraftKings, and then not Fastly. Shopify. Shopify has been pulling up a little bit. We saw some unusual options activity flow here as well. And then Zoom saw a little bit of a pop this past trading session. Cyber security stocks have been popping off. Your CrowdStrike, your Zscaler, your DDoG, right? And then also Roku has been popping off from where earnings came up, right? Enphase Energy Solar has been popping off. Stocks like Etsy, right? Etsy's been going nuts. So all of their growth stocks have been popping off, okay? So you have to keep an eye on some of these because they would end up continuing to rally if we see that pop off in Nasdaq. Okay. Of course, big tech has been holding up the market here, right? Look at Apple, Microsoft, and Google. Lots of these stocks have been just holding, right? The past 2 trading sessions, I told you guys, likely to digest this move. We're likely not going anywhere for a couple of days, so don't overtrade on Monday and Tuesday. And now it's Wednesday, so we're likely to see some kind of movement here heading into this week. Microsoft, on the other hand, rejected the 280 level, but we can't go short on Microsoft until it really starts to break 270. So it still has $7 movement down because it could really bounce in this region here before moving to the upside. That's the way that I look at it. Of course, I may not be right? And then also, commodities is the other thing that I'm looking at, right? Silver and gold as possible plays for bounces. I'm looking at that. And then DoorDash for a possible upside break, only when it breaks though. So not really that, crazy about it. So yeah. Okay, so somebody said Meta in the Discord, so I'll break Meta down. Okay, so Meta, really simple. It's been trading in range. It's been trading between 154 and 172. And it's interesting because 154 and change has been support for at least 5 times now. And the interim break that we need is 165 for the upside pivot into 172. So this gives us the upside pivot for the day trade / scalp. But if you want a broader swing trade, then there's 2 pivots, which is 172 and 154 and change. 154 break to the downside, reject 154, gives us the downside extension into 145. And then the upward break of 172 and then a bounce on 172 gives us the upside at 181. So the white lines here are the fib extensions on either side, which I've already plotted. So pretty simple on Meta. Just keep it between these ranges, and then if you want to play a day trade to the upside, you've got to get the break above 165 to play up to about 170-ish. Other than that, don't touch this. Just let it do its thing, and yeah. And then we had Boeing move very briefly on Monday, I believe, but it didn't really break out. It kind of faked out, as Boeing does all the time. So I'm still holding off playing Boeing. I was looking at mean reversion for Disney, but it never really happened this week. This stock has a lot of room to run back up to the mean, which is 118. But we haven't seen that move just yet. So I'm waiting for momentum to come in. I've already set some alerts here. And then if you want to play energy, XOP is a great proxy here to play up into the 150s for this bounce on commodities. This is a good one because it has a bunch of an oil exploration and gas exploration companies all in one place. It's moving up in pretty nice cadence so far, so we'll see if we can get upside pressure and take the long. If not, take a rejection play at around 140 and then play the downside here back to around 128 or so. And then finally Tesla, which I mentioned is going to be very tight here and likely to reverse course from where it is trading. So I'm not going to touch Tesla here. Not yet, at least. It's trading in the range. Range trading for Tesla can be pretty terrible. The pivots here for Tesla are pretty simple. The break of the high, which is 936, sends us further higher. And then the break of 879 or 880 sends us lower. So pretty straightforward here on Tesla. Okay, so that's all I have for you guys in terms of macro and technicals. The rest of the stocks and stuff like that we'll cover as we get into Friday session. Does anyone have any ticker breakdowns for me right now? If you guys don't have any ticker breakdowns, then I'll end the stream right here. But I like to keep these short and sweet. How have you guys been, and have you guys been enjoying these live trading pre-markets? These pre-market breakdowns, have they been helping you out in any way? Or, you know, give me some feedback. I would love to hear from you guys. Also, post your tickers if you want me to break them down. Thank you, Jack. Hey, nice to see you, Seabird and Chia Takwa. What's up, man? No problem. Pfizer, sure. Okay, let's do it. Pfizer is nice. So, Pfizer has been in a very interesting kind of position. Now, the long-term trend daily chart, right? Look at this thing. It has been holding support on this trend line, and now it's starting to lose it. But then it's faked out before here, so this demand zone is important. But we could short it down into the demand zone though. So okay, so let me show you how I look at this thing. It's pretty simple. So you know that there is possible downside if it rejects, and it has rejected. So looking at the 4-hour here, it's starting to make lower highs, but it hasn't made a lower low yet. So this was a low here, but then not a lower low. This was a low here, but then it's still moving in a very weird phase. So very simple. Break of, what is this here? $49. You can play a $48 put, right? A $48 put. Break of $49 gives us the $48 put, or the $48 target, basically, right? And then there's really no need to try and press 47 and 46 because this is a demand zone. Anything can happen here, okay? So I would say once you get to 48, exit, and then you take your cash, and then you wait for the bounce in this region. Because I think a bounce will be coming. It's just a matter of time when it happens. And then you position yourself here with the better risk to reward ratio for the upside. That's what I would recommend with Pfizer here. So if you're looking at this on the 1-hour chart, then you'll see what I mean. Lower highs, but then no lower low. Well, lower low, kind of lower low. This is kind of considered lower low, right? Lower low, right? Lower high. Higher low. Okay, now. Break of 49, 49.14 gives you 48. Close out at 48, take your money, and get out. That's my recommendation. Wait for the bounce here in the demand zone, and then play the upside. We'll get to the upside when it gets there. Anyway, I'll set an alert right here so that I can play this with whoever recommended it. Seabird, thank you for your service and giving me this trade idea. I appreciate you very much. So set an alert right there. And when it breaks out, well, so first of all, set your alert a bit higher, right? Set your alert like at 49.31. Give yourself some time. So alert comes out, you can go take the contract and then start playing it. Now, for expiry wise, I would go, you know, like at least 1 to 2 weeks out. Don't take the weekly expiry on Pfizer. It takes a little bit of time to move, so I wouldn't take the immediate expiry. Okay, next ticker is Pfizer and then plug. Oh, interesting. Yeah, so this one moved with the solar, right? Yes. Oh, this is also great. Thanks for bringing this to my attention. See, this is the reason why I asked for breakdowns or tickers from you guys. Because, look, you guys have great, like, I only have a pair of eyes. Y'all have, like, collectively much more sets of eyes than me. And bringing these things to my attention, everybody wins. And we could easily, you know, play it together. So there's no downside on sharing what tickers you're trying to watch, okay? Okay, so plug in a big demand zone here, and it's starting to peak out, which is nice. except for let's hope that it doesn't get rejected here. So the way that I would play this one is to wait for the break above 24.14. It's not yet at the breakout level. I know it looks like it's breaking out, but I would wait a bit more. And earnings is coming up on 9th August, which is next week. Yeah, next week, Tuesday. It might be running up towards earnings. That's a possibility. A break of 24.15. This could be the best to take it, to be honest. And then you can play up to at least 25.60 or 26 even, possibly. There is upside here, $2 upside. You can go risk off around 23-ish. So you have a $2 upside for $1 downside. That's a 1:2 risk to reward ratio. That's not bad. I would play this one. If it breaks 24, it's a decent sized trade to take. That's the way I would do it. So once again, recap. Break 24 and then play the upside into 26. Sorry, my drawing is horrible. Break 24, take the upside 26, risk off around 23. There you go. Okay. And then next one is Marriott. Okie dokie. So Marriott, we already got these targets hit. Let me just take off some of these drawings because they're no longer. Delete this away. This thing has earnings. Oh, it just posted earnings. Was it yesterday? It posted earnings yesterday. I'm guessing earnings were flat. That's why the stock hasn't moved. Looks like a midway move between a supply and demand zone. This is tough. It's sitting in between everything. I mean, if there is momentum, then you could play it, I guess. But I personally don't like this setup. I just don't like things that are in between moves like this. This 4-hour pin bar is interesting, though. That's what I would say. Definitely looks like buyers, are pressuring this market up for Marriott. And I think that maybe a break of 162, right, where it's the high of that pin bar, then you could look into maybe playing the upside here. But I wouldn't do it though, because I can guarantee you that there's so much of, trapped volume in this region. See, there's just too much of action. Look at it. There's so much of trapped volume here in this region. That's the reason why I'm thinking to myself, this is probably not a good play. When I see so much of price action on the left like this, right, this is difficult. Because this all is going to mess with my upside targets. All of this previous price action is going to be numerous amounts of buyers and sellers lined up here. And the volume tells you that, right? So this is tough. I personally would stick out of Marriott until it gets into the dual zone. And then if it breaks above the dual zone, then yes, we could play it up to 178. So it's getting to the dual zone right now, and this region here is just a bit dangerous in my opinion. Where it's getting rejected now, in fact, is a bit dangerous. So stay away from Marriott between 162 to 169. And then if it breaks above 169, you could take the play up to 180. Or if it rejects here, then play it down into 150. That's what I would say. That's the best way to play this. But where it is right now, it's it's a high volume node. There's a lot of things going on. I personally would just avoid it for now. Okay? I hope that was helpful. Alrighty, well, I hope this pre-market stream was helpful to you guys. If you have any other questions, feel free to post it in the comments. I'll get to it in the next pre-market stream. And I will see you guys on Friday with another breakdown. I hope that you guys have a great trading session. I'll be on Discord right now, trading with the team right in about 30 minutes from now. And yeah, let's see what the market presents. And good luck. Take care and talk to you all on Friday. Be careful with SPX. Remember that. Only play the pivots, all right? Alrighty, guys. No problem, Jack. Have a good day. Take care. Peace.